Good evening. It is 8:31 Eastern Time on Wednesday, August 31st, 2022. Welcome to the day in review for the E-mini S&P 500. Kind of got a lot, I think, to share. Hopefully it's packed with some good stuff. It's all improvised, so we'll see if I can keep it together. I'm just going to be looking at the charts, and it's the first I've looked at it since about mid-afternoon. And take a look at what happened and what we had thought might happen and how it played out. So the first thing, we're looking at the regular trading hours daily chart. And one of the things I mentioned in the video this morning was that I didn't like this low back here on the 27th, right here. We did take it out. I didn't, unfortunately, I wish I would have gone back and I don't think I went back and showed the profile and why I thought that was a weak low. I had, I just didn't like this low on the 27th. And I can't remember what all I said about it, but I don't think I went the profile, but I did mention it. The 27th, this low wasn't any good. And how about that? The low for, let me pull this in here. The low here on the 27th was 54.50, and the low today was 53, so we took it out by 1.5. How's about that, right? Another thing I want to mention on the daily chart. So I've been looking at this as possibly more than a corrective, just a corrective zigzag, that we are actually, this is the market's turning around and going up. I don't know, but I was looking at this being an impulsive wave up 1, corrective wave 2, impulsive wave up 3, corrective wave 4. We can move our 4 over here. Now, the stipulation is if this low, or if we get below this high, which is the terminus of wave 1, then this interpretation is not right, because that violates the rules. Now, in the futures markets, sometimes those kinds of violations are acceptable, but I already don't like it from the standpoint that in general, we have the 38.2% right here. This right here is from the terminus of wave 2 to the terminus of wave 3. This is the most typical wave 4 retracement, and it also typically will end near the origin of a wave 4 of one lesser degree, which would be, you know, arguably 1, 2, or 1, 2, 1, 2, 3, 4, 5. So like this wave 3 is a emotive wave, and it's also going to be made up of a 5 waves. Okay, 1, 2, 3, 4, 5. So if we get, but one other thing. So we have come down to. So I'm gonna remove this 38%. Okay, but we are at one of the most common retracements for wave 2, which is 618. Let me put the price on there and see if we, okay, it is supposed to be showing the price. Yeah, it is. 54.50. And we went to 53 even. So we did duck below that. We hit that 618 right on the nose. We still have not come into, and this is the high of this, the high of wave 1 is 50. So we're still a couple points. Now it looks like it's right on top of it, but that's just the nature of, you can see here. Okay, we still have some space in there. I have to really stretch it out. Even now, each one of these ticks is 4 points. So we have not violated this, one of the rules. Okay, so we'll see what happens. But I thought that was kind of interesting. You know, I'd mentioned July 27th as a low. I wasn't that, and basically that just increased the odds that we might come down here yet. The fact we didn't get a lot of extension past yesterday low, it more of a balancing day in certain ways. I mean, the motive or the trend down certainly slowed a bit. I'm going to turn a fan on just a moment. Getting a little warm all of a sudden. All right, a couple things. I'm going to remove this trading range here. I guess I could move it down to this if needs be. I don't really like this as a trading range, but this is sort of where I will call a trading range from a swing high to a swing low. Extend it. Snap this to high and low. Okay, that's not working. What did I do wrong here? All right, never mind. I'm just going to erase that for now. It's not that important. Let me move on. Better to get to the profiles anyway. That's where the good stuff is. This 39.50 level, I don't remember why I had that other than it was sort of a, you can see it traded around it. I don't remember. It was this swing high here. Don't necessarily need that line on there. Don't remember what that is. I'm going to keep this channel going. Another interesting thing is, if we look at the fact that, well, let me draw a zigzag. Let's see here. So we've got a zigzag here, and that extension is 127% of this first move down. Okay, so that's something that's interesting, and that's one. That's a, it's one of those Fibonacci numbers that kind of shows up. But I want to also talk about the fact. Let me make this. This is a different chart book than I have that I showed before, because on the other one I did already have the head and shoulders pattern drawn in, and I don't remember where I drew it from, but it doesn't matter. It's kind of like this. That's the low. Let's see. Okay, so we were looking for a measured move down. What the heck? Okay, I got my button sticking again. Just a minute. So yeah, it's on a different chart book. So I had neckline, something like this. I think that's about, it's, give or take a little bit. And then you had a measured move down. You're going to be from the height there to the neckline, and then we're going to copy that and move from the break, and we're going to see how far we got. Oh, we didn't get quite all the way as far down as it looks like it could go. Anyway, we'll look at that again tomorrow, because the overnight has already been trading lower. All right, so trading below the 50, the 100, and the 20 moving average. Now let's see what happened today. Okay. First of all, let's talk about what we thought might happen. I say we, meaning me, but All right, reject. First story, again, this is not in any particular order. You know what, I'm going to do this so I can draw on it. Let's see here. Just a moment. All right. Minimize that. Okay. Yeah, this video is probably going to be a little longer than I wanted. I'd really like to keep these under 10 minutes, but, again, I'm improvising this and just taking it as it comes. So, reject prior day's value area. So, in this case, we'd be buying the value area high. This worked a bit. Let's take a look at that, because I know I traded it. Just a moment. Let me keep this on top. So these are in one, so it makes it a little easier to see the profiles because they are so elongated generally. These white lines right here, the value area high and value area low. Let me look at the 10-minute, pull that in, because I don't remember how all this played out, but you can see that we opened. We did come down in A, split this off, and we started to build some value in here. It was a little stutter stop, but we came back out, and then at some point we had the VPOC up here. I want to tell you, between a pre-market trade and my early trade, I did fine real early, and I should have walked away. I thought about it. I thought, just go, come back. You've already done a bunch of work this morning, and that's great. You're at a comfortable place. Just go on home. Well, I was, go do something else. Well, notice that in the overnight, we came up very close to the overnight high at this point, and it was pressing. It was hanging in there. The volume point of control at this point was up here. How often do we get a move this close to the overnight high or low and it holds? Especially when I'm looking at so much room, and again, remember, this is now in twos, so this is kind of compressed. There is so much room for short covering, not just here, but in this overnight stuff that never got taken out. On top of that, not only in the one that's in twos, we have a poor high. So we've got to keep this in mind, okay? This is real potential for short covering fuel, let's say, okay? So I guess I'd say greedy, got in a hurry. You know, I really thought I might hit a home run. And I hung in there. I got in at 11, I think. I got in at 11, and I got a lot of false starts, and started coming against me. And you know what? I thought, well, this is worth it to risk a bit more. And I fell into the trap. I decided I was going to allow for a lot more risk because, okay, yeah, we're getting towards the end, I think, of the TPO, and you know, a lot of times you'll see B open up and come down near to the open and come out. I started giving it some room. Let's just put it this way, I screwed up. Okay, so there you go. Just because I started seeing such a potential for a real score here that I got a little, I guess, confirmation bias, you know. I started seeing all the reasons it ought to work and all the reasons it ought to come back, and forgot about all the reasons. This was just like the early morning fake out to where we're, you know, how often, well, I've been doing these again for that long lately, just a couple weeks. There's so many times, especially the first hour or so, we get one move in one direction, getting everybody going long or short, and then all of a sudden the market just rolls back over to the other side, and without it even being a neutral day, meaning taking out both sides of the initial balance. It'll leave the higher low with the initial balance, an A or B period, or even C. So anyway, yeah, that happened to me, but again, this actually did work. Okay, let me, oh shoot, I should have done this. Let me do this. Okay, I need that. I want this on top. I also want the 10-minute because I want to show the, there's something I want to share in the 10-minute that I think you'll find very interesting. So this is a 10-minute profile, and I talked about this on last Friday's review. Okay, so let's look at A period here. As you see, we came down the first 10 minutes, and I took the volume off of this. I could put it back on, but maybe, I don't know if I want to or not. I cleaned this up a little bit just for this reason. I now know why. When I showed this chart before, the yellow line, I typically use yellow for the TPO POC. I call it a TPOC. Okay, and it was not at the halfway point all the time. It was at different places. I was a little puzzled by that, and I realized I just had the color wrong. I had this set to where this actually shows the volume point of control. And so even though I removed the volume profiles, it was still showing the volume point of control. Well, I removed that, so every yellow line here, until it's intersected, it'll go straight across. This is the actual midpoint, okay? And the red letter is going to be the open. You know, obviously it's right next to the little yellow arrow, that's the close. I tried to remove that yellow arrow. I thought, don't need that, or yellow flag. But let's look here at A period. Okay, so A opened, ticked up a bit, and came racing down, and we started to build some volume in here. Remember, it's the first 10 minutes. Anything can happen. And it came down to these known references, and that tells me that, you know, this isn't like big institutions like making big moves. This is just short-term traders pushing things around to visible references and stuff. So we have a weak low here. Okay, now a weak low means we're probably going to come back through it. Odds are pretty high in the same day we might come back through that. So I bore that in mind, and also when I started to realize when I got long in here that I might be in for a little problem, because you could argue too this 10-minute low is a weak low on the 10-minute bar because it's right on top of that value area high, and you know what? It started pushing me down here, but that's not so important, as I want to talk about the value of this trade. Okay, so let me do one thing here. Go risk reward. Okay, so from here, and I did take this. I got long on the value area high. I followed my plan, right? The red dots is where stop might be, but I'm more interested right now in the potential profit. Now, obviously, that means you would have to get out at the high exactly, but let's just be conservative and say you got out here at the swing high in the overnight. So that's 64 ticks, $800 on a one lot. I don't like to talk necessarily dollars in this situation because I'm not trying to like, oh, look how much money you can make. I mean, honestly, I don't remember how this went up, if that was a struggle. I know I didn't take that kind of chunk out of it. I took a lot less than that. But, you know, hey, I got on base. And early on in the morning, if you're going to trade this, when I first started trading, I was told that the first hour is amateur hour. Just sit and watch and don't trade anything because you'll just get eaten up. Well, I believed that for a while because it was very weird, erratic. It was very hard to understand what was happening. But as then I decided, I made a determination, you know what, somebody's making money that first hour. There's a lot going on. I want a piece of it. I want to know how to do it. And I figured it out. Doesn't mean I'm an expert. It means I've just kind of learned how to surf a little bit, okay? All right, so we rolled back over to the downside. Now, let's talk about, so this was worth, I don't know, let's just give it a figure, 10 points, okay? Well, let's just make it 5 points. 5 points. Okay. All right. Okay. The next one would be enter the value area, move to the value area low. Means now we're rejecting higher prices. Okay. We rejected higher prices, came back down, and came into the value area. Okay. So, and it started building volume, and the volume point of control dropped. I'll show you that in a second. All right, we need to mix to negative market internals, and for the first hour or so, they most definitely were. It was slightly positive for a while, then it was slightly negative for a while. We need to move inside the value area and build value below the value area. We're looking for the 80% rule, or the special situation. What it is that when you have a TPO move from inside the value area to outside the value area, and then move from outside the value area inside the value area, and it closes, and a new TPO opens inside the value area, does not trade outside the value area, and closes inside the value area. Now you have a potential special situation where the odds are high that you're going to trade to the other side of value. And based on some decades-old back testing or whatever, it was 80% odds that favored that it would do that. So that's where the title 80% rule came from. I put 4 trader entry here. Basically, that means you're going to get high, or you're going to get short against the underside of the value area high or something like that. Basically, you're going to find that resistance, support is now resistance, is the sort of the idea. That's what, when you see this, if you're one of the 4 bots and 1 person who watched this video, that's what I mean by floor trader. Okay, it's a 4 trader trade. That's what used to be called 4 trader trade. So came in, B period, opened outside, came in, stayed in, went above it, the little prairie dog here, and couldn't get back of it in this period. And now we're moving down. I want to show you now on the TPO profile chart what B period volume structure looked like, and I don't remember exactly, but let's look here. Okay, very much so. Look how thin it was. When we opened here and traded back in, we actually built more value. Now let's move these together. Take a look at what it looked like. Okay, see how the volume point of control in the first hour moved from all the way up here all the way down here. So this is what I mean by saying that now we're building value inside yesterday's value area. Now, one thing to bear in mind, another thing I was letting myself believe is like, well, value is still overlapping to higher. I got to tell you, the brain and the mind can do funny things, especially if you're tired and you start to rationalize things or confirm things, and your bad decisions don't look as bad as they really are. Anyway, I don't want to talk about that anymore. But I certainly am trying to help myself break some bad behaviors that continually crop up here and there. Another thing's important, you know, we're below the pivot point and below this 4,000 level. There's just something about these numbers that turns people on. You know, we had value built below it, then up here, and then now it comes down and strongly builds it below it. And then we happen to be now below in the value area, so we traded from outside the value area inside the value area, and we closed in the value area. Now this is the rub, okay? C period came back outside. Well, there's a lot of ways to look at this. I have not flipped the chart around. I use 70% volume value area, and you can see how nicely it fits with the volume profile, okay? However, the hours of my chart are from what I was cut my teeth on years ago, and I started trading, is from 9:30 Eastern time until 4:15 Eastern time. 6.5 hours. Yeah, let's see, 405 minutes, I think it is. Okay, and but now they go till 4:30. They got rid of this little runoff. The runoff was from 4 to 4:15, and then there was like a pause until 4:30, and they got rid of that 15-minute pause. So I know some people will stop their chart session time at 4 o'clock. It was the whole thing about that. It can change your levels. You know, it can change where your close is on your chart, and it can change where your value area high and value area low are. So I don't know. I may play with this later, but that's not. I'm going to explain why this is still valid. Okay, in my book. Okay, like, I don't know if this will put the value area high up here, and that this still would have not been violating that one of the conditions. Well, you got to remember, there's more than just that condition, okay? It's more than just this is very important. It's more than just seeing the 80% rule. That's just an entry. That doesn't necessarily mean that we're not going to move to the value area low, okay? We had mixed, this is a very important distinction. Some people think, well, that trade's not valid because it didn't fall into the 80% rule guidelines or rules, okay? Because obviously 80%, if it's only 80% chance, it's not a rule. It's an odds-based potentiality. Anyway, maybe I'm getting into semantics there. Sometimes I find language in trading kind of funny, like testing, like you test a level, like everybody's getting together and we're gonna go test that level. We're gonna test it. It just does not sit well with me. It's just like, that's bad use of language. It's it's poorly describing what's really going on, in my opinion. Okay, so it just sort of all gives me cognitive dissonance, and that's why you'll hear me catch myself or just reject that expression. All right, moving on. Gee, I don't know where all my energy came from all of a sudden, because I thought this was I almost was too tired to make this video. All right, so we enter the value area, and we're looking to move to the value area low. That's the story we're looking to see play. What conditions? Well, we wanted to have mixed and negative in market internals. We were starting to get negative. We moved inside the value area. We built value below the value area high. Okay, well, very often the value area, the move to the other side of value, you might come outside the value area by it might be right on it, might be a tick or two. Well, the market, I mentioned this, I believe, in my pre-market video this morning, that lately, the last, seems like probably now 2 years, the market isn't as exacting on levels anymore. It just seems to kind of rub through them and smear them a bit. Now, what's interesting is, like in the A period, we came down. This is what I mean by exacting. In times past, this was very common. You'd see it go to a visual level, right? Like maybe a tick above, right on it. I used to trade with somebody who always would put their order on the level. And I'm like, you're going to miss a trade with a resting order on the level, because so often it comes within a tick or two and reverses from there. People get in front of it. And but you know what? Now, a lot of times it'll come to a level and it'll hit it, maybe get a little bounce, then it'll cream through it, and then then you'll find that level holding, just like it did with the value area high today. It came all the way down here, but then came back and it started to find support. So I'd mentioned that you may not want to get long on this value area high, like if it chucks right down to it, you might want to let it play out a little bit and then get long when it comes back up against it, and that's how I played it. And that worked well for me the other day. I did that the other day too, and it did well. So I'm reluctant anymore to, especially in the opening hour, because later in the day, the market behaves differently. But there's so much volume, and it's almost like erratic how the market can move and overshoot. It seems there's just too much of a push. It's kind of violent. That's the way to describe it. All right. So we got in here, and now we're in C period, and now it's like, well, do we have the 80% rule? Let me split this here. I'll merge them back together in a minute. Well, we kind of have a facsimile. C didn't take out the B high. We built all this value. The volume point of control moved down here. C opened way down here. Let's see where the value area low is. It's not that far away. There's a pretty good shot, since we're already halfway through this range. We might get down there. So where would you get short? Up here, right? Well, let me show you something else, okay? Because obviously this played out, right? This played out. There's the value area low. From C period to here, it certainly did. Now let me show you something. I talked about trend days and how to get on board, okay? Let's see here. I want you to see something. Now, well, this may not be what showing you exactly what I wanted to. So I talked about looking for one-time framing. Okay. Let's see if this is gonna work. So, okay, for getting short to the downside, this did not. The 10-minute thing may not have helped you so great. Okay. But when you talk about what happened here is that D period came back in, then E period opened up. It did not take out the value area low. What you need to look for, because one of our scenarios was this. So I also talk about a blend, okay? We got to blend these stories. Open in range in value. Well, we didn't open in range in value. We opened in range. We traded into value. Rotate within yesterday's value area or range for a balancing day. Enter value area early, which we did, or open within value area. We did not do that, okay? Market internals, neutral mix, we already talked about that. Slow tempo, I don't know. It was kind of, you know, it wasn't the slowest, but it wasn't the fastest either. And it was a low confidence open because we traded on both sides of the open a number of times, okay? We were up and down, right? So that happened. And we rotated within yesterday's value area. So once we had this move, I mean, this almost played out in order. 1, 2, 3. Trade towards value area low, VPOC, PLD. We didn't get to the prior low a day yet, but we did get to the VPOC and value area low. Now we come back in, and so we open in D period. I'm sorry, close in D period, open in E period, did not take out the value area low. Well, look what happened. We came all the way back up to the value area high. Then we closed back in here, and F came out by a couple ticks or maybe a point or something, and then we traded all the way back down to the value area low. So this idea of rotating within yesterday's range, so you had to move from here to here, here to here, here to here. All right, well, how much is that worth? Let's see. Let's just say we got one of those, or got a part of one of those. So let's go reward to risk. So we've got, let's just go from low to high. It's just a little cleaner here. Say we get out just under the value area high, right? Let's just say right here. 83 ticks. Now it doesn't look like that far, right? That's 1,037.50. That's from 74 quarter area to 96 quarter area. So we're looking at 22 points. That's a lot. That's a lot, right? So there is potential to make around 20 points to the downside, 20 points to the upside, and 20 points to the downside. If you were watching on the 10-minute, you started to see, like, you could see it a little clearer. Like you could get a better idea of the grinding higher. And every one of these you can have a volume profile on, so you could use some of those areas to make entries on. Or you could use the whole trading at the halfway mark. Like for example, this F, could have risked this F high. It came exactly the tick. If I'm getting a little, let me clean this off here. So right here, that's what I mean, okay? Right here. Now the thing is, let's say you wanted to, like, well, I think I'm going to risk, you could risk the E high or the F high, and that might be, let's see, that's still a number of points. That's 3. That's kind of a lot. But let's say you were gonna risk trading. Okay, I'm gonna get short against the halfway mark of this F high. When this 10-minute period opens, I'm gonna put a short in right here at the halfway mark of this one right here. Okay. Well, you put your stop in up here, okay, and that is 97 to, let's see, 92.75. That's kind of big for me. I don't like it that much, but you could have maybe just risked that open, you know, and it wouldn't have gotten you out. Or you have a 5-minute chart or something like that. There might have been another place to put your stop there, but you know, again, this halfway mark thing doesn't work all the time, but when it does work, it works really well. It's just it's a technique, you know, where see you wouldn't have gotten stopped out if you would have got short. Well, at H opened above it. You know, you are going to have pullbacks and stuff, but the potential is there, right? So, okay, so this is worth, let's just say, okay, this was worth at least 20 points. Let's say you got 5 points out of this move, okay? This was worth 20 each way, so like what, 60 points? So, well, let's just call it 40. Well, we already counted ourselves 5 for this 20 move down. Let's count this rotation worth 40 points, 40 plus points. Let's count that. You managed to take 5 points out of that. Okay. Now, take previous high of day out with continuation. That never happened at all. Last one is take out the prior low of day with continuation. Trade through the value area with momentum. You know, I didn't sit and watch all that. I don't know how much momentum was there. I think sometimes we need to look at a slow grind, a steady slow grind as momentum. That's something that's new to me. I just kind of taught myself something there. I really need to look at that and count that as momentum. So often I tend to think of momentum as like a hard driving move. I think a slow grind is, you know, what they say, like the wheels of justice grind slowly type of thing. It's that kind of thing where they move, but it moves slow and steady and it's crushing, you know. Take out overnight low and prior low of day. I think, no, this overnight low was, okay, yeah. This overnight low was within the prior low of day, I'm pretty sure. But then there was the overnight low from the day before. So we want market internals strongly negative, one-time framing lower, high confidence open. Well, I don't think we had that high confidence open. And again, this story is looking at like pretty much a direct move down, but we didn't have that. And a lot of times, as I mentioned before, I think I mentioned it even this morning, that very often we have a certain kind of tempo and the way the day may seem to play out. Then all of a sudden, later on, either somebody shows up to their computer screen or comes into the office or whatever it is, and all of a sudden the market takes on like a different personality, it seems, right? A new player has entered the room. Market internals did grow strongly negative, and we were one-time framing lower, at least on the 10-minute at some point. So let me show you what I mean. Okay. It's in this move down. Okay, D period took out E period high. So even though we were one-time framing lower in D, E period stopped that. But when F period opened up, at least in the 10-minute and maybe longer. So F period opened up, we kept trading lower, F period closed lower, G period. Once G period, I need 3 periods to count it officially as one-time framing. But now we're one-time framing, okay? Now on the 10-minute, we stopped one-time framing. But notice the H did not take out the G high. So we're one-time framing down on the 30-minute bar. And then we keep going, okay? 3 periods of H, I. Now J opens, J took out the I high, we stopped one-time framing, okay? But there was a moment where we could anticipate we might be one-time framing down and get on board using one of these techniques, hang in there, and you could have held it for quite a move, you know, all the way down in K, right? Now, okay, I'm a little confused here. I thought we got to 30 or 50, yeah, we did, okay, end period, all right. Okay, these green lines, that's it should be a shaded whole green area, so don't pay attention to that. But I will show you on the regular profile, okay. 5750 is that low that I told you on the 27th of July that I didn't like. So look what happened. We came all the way down here. Let me undo these splits. We came all the way down. See, we won time frame nicely from basically F, G, H, I, J, K. That's a couple hours almost, Then L stopped it. Anyway, came all the way down, took out that low, and built quite a bit of volume down here as well. This is what I meant by those green lines. They really should look like this. It should be shaded. I can fix that, no problem. This is just a zone that I use that has to do with pivot points and Fibonacci and stuff. All right, well, I think that's enough for today, but let's say that you got on board for that move to take out the overnight low, which was right here. Okay, we took that out. I like this color. I need to put my overnight lines on this chart. I don't think I have them on here. So overnight low, we took that out. And there was some back and forth. This could have been confusing. Might have been short and then get long on just a re-entry of the overnight low. That's an option. Anyway, so we came back through here. Looks like there was opportunity to short against that overnight low area. It didn't quite get up here in INJ, so how would that have played out? I'm not sure. You'd have to look on a smaller time frame probably. But again, the 10-minute, there might have been an opportunity to be short from up here or short somehow in here if you realize, okay, now we're going, or maybe against the value area low, because now we're outside of it, and now you're looking for, okay, I can use the floor trader technique. We come down, is this going to hold? It looks like in J it opened, came back up through, but then once it came back down, again, we get a lot of this. It goes through the level, but then it holds a little bit later. And where it used to be, if it went through it once or twice, it's invalid. Now it's kind of like, well, I don't know if they run stops. I don't know what they're doing, but at any rate, you just got to start to see a pattern and try to exploit it, And that's what trading really is understanding patterns, which represent behavior and psychology of other players. But these patterns are kind of your tokens to read. It's like a language, so it's communicating something to us, and we can exploit it. All right, so came down nicely, took out the yesterday's low, and we're looking for continuation. Didn't get a lot of continuation, but we traded through the value area, and we took out the overnight low and prior low a day. I'd say the slow grind was momentum, but let's say we took out the momentum. If you notice in the pattern here, like I'm not even covering possibly all the bases, but like not everything has to be present. It doesn't even have to be like every single one of these has to tick the box. You gotta use experience and intuition a lot of times to like understand, okay, well, the markets, they're really strong, and we were one time framing pretty steadily. I believe we're going to take out that low, and where can I get in to go with it, So there you go. And that may not be the trade for you. I know I used to love to short. I took great shorts. For some reason, I'm not as comfortable shorting anymore. I don't know why. I'm working on it. Some days I don't think about it one way or the other. The other days, like I just feel like I'm not going the right direction, and then I tend to be a contrarian, and I may do well taking small bites out of it, but I really should be on the other side of things, because you can go against the prevailing trend and still make money, but it's not the best way to be necessarily. But if that's not for you, you know what? A lot of one way to look at it is this. I may not have gotten with, even though I talked about this way, I may not have been able to take this trade very easily to get short to trade all the way through this. I may have been seeing all this congestion down here, and maybe it was struggling a lot, and we got rejected once out of there and not liked it. But you know what? Maybe getting long, come back through, I like it. And this was a really nice example of how all these stories were important to like anticipate. Let's say you only got 3 points out of this. Okay, remember this is going to be later in the day. You might be wiped out. Well, here we got what, 18 points. So 18 points at $50 a point. I'd say that's a nice day. So that's $850, right? Or no, $800 on a day, and that's just by only getting a little bite of these ideas, which were clearly worth a lot more. Now I pray for the day, and I'm working hard towards it, where I can maximize all these potentialities. And when I even say 20 points out of each one of those moves, that's not even the full number. I'm just anticipating getting out, cutting, taking your profits at some point, not waiting, because so many times I've had that exit right in the spot where the market comes within a tick of and then reverses hard. Sometimes you just got to like get out when you got a nice piece of it and preserve emotional capital. That's important too, because I know myself, I just don't have the stamina to sit here all day anymore. So I was not around for this. I did not have anything to do with this, and I did not have to do anything to do with that later rotation either. Okay, I was around for this and this, and well, I did come back in the afternoon. It did. Let me think. I did do a little something, but I don't remember even now. I used to work where I met people. I met several people 3 to 5 times a day. Each time I'd spend a bunch of time with them. I had to know their names, meet with them, spend about an hour and a half, 2 hours with them, and then I had to forget them. And you know what? It's kind of the same way with the day. I look back, and I would love to like record the screen and all this. I just don't want to tax my system that much while I'm trading. And I have a pretty robust system, but you're talking disk space, all this kind of stuff that I'd like to record so I remember exactly what I did. And I just don't do it. I don't. Once the day's gone, I remember some of it, but I couldn't tell you everything I did unless there was something spectacular about it, either spectacularly good or spectacularly bad. It's just kind of same old in a way. All right, well, I'm kind of talking long now. There you go. I hope you enjoyed the video and got something out of it. And thanks for watching. Please hit like. And so I know somebody's watching this. I've yet to have anybody hit like. Thanks a lot. So you could be the one. Don't be a wallflower. Appreciate it. Thank you. Good night. See you tomorrow, hopefully. God willing.